Cipher Mining finished the week with yet another interesting twist, this time in the aftermarket. Following Friday's close, CIFR stock climbed another 45 cents, extending its recent rebound and closing out the week with renewed strength. What makes this particularly interesting is that there wasn't a major news headline directly explaining the move. No fresh press release, no new deal announcement, no sudden analyst upgrade. Yet, the stock continued to climb. And that raises an important question: what's really driving Cipher Mining right now? Is this just momentum and speculation, or are we witnessing something deeper taking shape beneath the surface? To unpack this, let's first look at the context. Over the past month, Cipher Mining has gone from being a high-performing Bitcoin miner to becoming one of the most talked-about hybrid stories in the AI and infrastructure space. The stock's meteoric rise has been fueled by growing institutional interest, a major strategic pivot into AI hosting, and a partnership that's still resonating across the market, the 10-year deal with Google-backed Fluidstack. That partnership effectively transformed Cipher's identity. It's no longer viewed as a pure-play miner. It's being positioned as an infrastructure company capable of serving two of the fastest-growing markets on the planet, Bitcoin and artificial intelligence. The Fluidstack deal is enormous in scope. It involves a $3 billion AI hosting agreement, backed by a $1.4 billion lease commitment, and Google itself holding warrants to acquire roughly a 5% stake in the company. Those details alone change the way investors value Cipher, from a cyclical miner to a high-growth infrastructure platform. And that's why, even after a week that included insider-selling headlines, early profit-taking, and market volatility, the stock has shown remarkable resilience. Friday's close was modest, up 4 cents on the day at $18.76 per share, but it represented a full recovery from a weak morning open. The follow-through in the aftermarket, however, adds a new layer of intrigue. When a stock moves higher in the aftermarket without a news catalyst, it's usually a reflection of one of two things. Either institutional investors are quietly accumulating, or short-term traders are repositioning ahead of the next week, anticipating that momentum will carry forward. In Cipher's case, it may well be both. Let's start with the institutional side. Over the past few weeks, we've seen Cipher attract the kind of attention usually reserved for companies making a transition into new, explosive industries. That's because the AI hosting narrative is not only timely, it's highly investable. For institutional desks, this type of story fits perfectly into current allocation trends. Funds are looking for exposure to infrastructure plays tied to AI growth, and Cipher sits in a sweet spot, offering real assets, scalable data capacity, and access to the AI theme without the high-tech risk of software development. At the same time, the stock's trading liquidity and float have grown considerably, making it more appealing for large funds to enter or build positions quietly. The move in after-hours trading could be evidence of those flows starting to increase. It's not uncommon for funds to execute block trades or accumulation strategies after the closing bell to minimize market impact during regular hours. But there's another dynamic in play: algorithmic momentum. Cipher has been one of the strongest performing names in its category for weeks, and stocks that experience sustained breakouts tend to attract technical and momentum-based trading algorithms. These programs pick up on volume spikes, price acceleration, and volatility clusters, and once triggered, they often drive additional buying pressure. That could explain part of the late Friday move. After a week of consolidation and a successful defense of the $18 support zone, the algorithms may have picked up on renewed volume and price stabilization, signaling that the path of least resistance was back to the upside. Now, it's worth emphasizing that none of this happens in a vacuum. Macro sentiment still matters, and this week ended on a relatively positive note for risk assets overall. Markets seemed to stabilize after a volatile stretch of sessions tied to trade tensions and interest rate speculation. The Fed's tone earlier in the week about potential future cuts helped ease some broader fears, which likely supported appetite for growth and tech-aligned plays like Cipher. But beyond the macro backdrop, the company's own fundamentals remain the real anchor. Cipher continues to perform operationally. It mined 251 Bitcoin in September, sold 158 of them, and now holds about 1,500 in reserve. Its self-mining capacity sits at 23.6 exahash per second, an enormous figure, and the company operates more than 114,000 miners with a fleet efficiency of 16.8 joules per terahash, making it one of the most efficient in the industry. The Black Pearl site has completed Phase 1, adding over 10 exahash of capacity, while the Barber Lake expansion continues on schedule. These facilities aren't just mining farms, they're flexible digital assets that can pivot between crypto mining and high-performance AI workloads. That flexibility is what makes Cipher's business model so unique right now. In a world where demand for compute power is skyrocketing, Cipher's infrastructure is effectively AI-ready. That means even if Bitcoin goes through cyclical softness, Cipher still has a pathway to monetize its assets through AI and HPC hosting contracts. And that's exactly what the market is starting to price in. The Friday aftermarket rally, while not massive in absolute dollar terms, is a signal that sentiment remains constructive. It suggests that despite all the noise earlier in the week, insider selling, profit-taking, and volatility, investors are focusing on the long game. The insider sales made headlines, but insiders have been selling periodically throughout the year, and the total holdings remain substantial. The company's long-term vision hasn't changed, nor has its trajectory. This is also where psychology enters the picture. In market narratives, perception often moves faster than fundamentals. Once a stock begins to earn a reputation as an institutional favorite or a quiet accumulation story, traders start anticipating the next wave of buying. This self-reinforcing cycle can drive momentum long before the next official catalyst hits. For Cipher, that next catalyst could be any number of things. We could see progress updates on the AI hosting rollout. There could be new client announcements tied to its data centers. Or we could see additional filings that reveal further institutional buying. Each of those would reinforce the current trend and help push the stock toward its next technical target, likely in the $20 to $21 range in the near term. It's also possible we'll start to see analyst re-ratings or price target revisions in the coming weeks as firms update their models to reflect Cipher's diversified revenue potential. That type of coverage often triggers another round of institutional buying, particularly for funds that benchmark against analyst consensus. But even without those immediate catalysts, the tone of this week's trading tells us something important. The stock has matured. The early-stage retail momentum that drove the initial breakout is now being supplemented, and in some cases replaced, by deeper-pocketed participation. That shift tends to make rallies more sustainable. It doesn't eliminate volatility, but it changes the character of the price action. Instead of sharp, speculative spikes followed by equally sharp retracements, we start to see steady stair-step accumulation patterns, slow, consistent, and institutional in nature. That's what appears to be happening here. For traders, that's a good sign. It means the story is broadening. The more diversified the shareholder base becomes, the more stability the stock tends to find over time. For long-term investors, it's another reason to stay focused on the fundamentals rather than the day-to-day swings. Cipher's vision is clear. It's building out the infrastructure layer of the AI economy, anchored by its energy-efficient data centers and powered by strategic partnerships. The Google-backed Fluidstack deal remains the cornerstone of that vision, and until something changes materially, that remains the North Star guiding investor confidence. So, what should we expect heading into next week? First, keep an eye on trading volumes and support levels around $18 to $19. If the stock holds that range and continues to show buying strength, it could signal that this recent pullback phase is behind us. Second, watch the $20 level as the next resistance point. A clean breakout above that could open the door to a retest of the $21 highs from earlier in the month. And third, keep an ear out for any follow-up communications from management or new filings that clarify insider activity or progress on the AI side. Clarity tends to attract confidence, and confidence attracts capital. All in all, this week's action, capped off by Friday's aftermarket bounce, reinforces one key takeaway: the story isn't fading. If anything, it's deepening. The fundamentals remain intact. Institutional momentum appears to be building, and the broader AI narrative continues to provide the wind at Cipher's back. While volatility will remain part of the journey, the tone heading into next week feels constructive. If Cipher can maintain this balance of operational strength, investor confidence, and AI-driven expansion, the stock could be setting up for another leg higher. The rally might not be over, it might just be evolving.